All right then, let's see what's happening this week. Starting off with Ethereum. It's been in a nice downtrend since, let's call it September. Hitting our low. Let's mark out some charts. So for my strategy, I want to see a break through this level here, 2753. So let's go to 30 minutes. And this level broke today. This could be an entry actually for me. If I look at there in the line. It looks something like that. 1.5. Yeah, we keep an eye on that. Set an alarm. We're actually in a lot of fear at the moment as well. But that's all I can do for this. It's making lower lows and lower highs. Might even wait for it to sweep, because I've been looking into smart money concepts. So I might wait for a little sweep up here. If we get that sweep, then maybe we'll take the entry here instead. Anyway, moving on to silver, which has been absolutely flying. I didn't actually take his trade. I was just looking at a smart money concept thing here. Let's see if I can still see what I done. So this was a sweep. Marked our fair value gap, but don't really know if it's the right one or not. Yeah, basically that fair value gap was coming across here. This is the CISD. Price broke that, entered onto the next at the CISD, got tagged in, and it played out lovely. But obviously, like I said, I didn't actually take that trade because I haven't back tested it, but something I'm looking into. And here we go again, is actually another setup about to play out, but need volume to be a bit more. And saying that's on the 5-minute chart, sorry. Still kind of valid. Mark out that high on this one. On this one. We'll keep an eye on that. Set an alarm for price. But yeah, gold has just been, silver has been flying. Kind of gutted, like, because I've missed so many opportunities on silver. You think just to buy, you know, and just leave it, like, but there we are. So yeah, that's silver. Bitcoin. Let's remark out these. Let's go from the daily. Bitcoin's the same, mine, from about September time, is it? October, August. This kind of range, same as Ethereum. Drop it down into 30. This is another level here. This one isn't as clean as Ethereum, though. I suppose it could still work. Let's set an alarm anyway. Just to see if it does or doesn't. Not much more to say on that one. Gold. This is what I mean by the liquidity sweeps. Came down, swept this, boom, back, right back up. Let's have a look. I don't know if I'm speaking rice or not, but there's no actual fair value gap. Maybe that little tiny bit here. CISD would have been this, from what I understand. Let's just do it here. Closed above it. Then we would have entered an entry here. Stop below that low. And this to the high. And I'll leave this, see if it plays out. But that is kind of what I mean by sweeping. And what I've kind of researched this week on how to enter is the 3 candles down, or 1 or more candle down. Should give a fair value gap. Wait for price to break the CISD. If it does, then set an order for price to come back down, and then just let it rip. See what happens. Aim for the neck. Aim for the highs again. The logic behind it is there's loads of liquidity up here, and you aim for that. Obviously, keep it. Yeah. If you think it's gonna go, put it a bit safe. So we'll see how that plays out. And as for gold, another absolute flyer. I set an alert for this because this is my actual back-tested strategy. Is the breakout of the highs. And US 500, again, another absolute ripper. Not as good as gold and silver lately, but still just ripping. Anyway, yeah, there's not really much I can do with that one. I want to see price retrace and then break whatever high it makes. I won't mark it out yet. Say no, I will mark it out actually. And I tell you what, I'll put 1 year as well, just in case price does actually sweep this and shoots back up like it did here. See, swept this low. Oh, there's silver. Swept this low. Let's have a look on the 5 minutes. Oh, see, this is where I get confused because it doesn't really give the fair value gap. Or does it? Like, does that count? Does that count? Because again, this would have played out. Like, let's go from here. So we think, right, yeah, we're waiting for price. Like, does this chop? I thought this chop like kind of invalidates it all, but boom, we got that thing. The push through the CISD. Put the order in on the next candle. Bang, stops below here. And then aim for previous highs, but the only thing is this one, previous highs up here. You could have even tried it from here. You know, I'll leave it there, see what it does. I'm just testing things at the minute. 7.6, like I'm just used to doing 1.5, so these are just monsters to me. Yeah, and that's it really. I've asked Gemini to give me some fundamentals. Gold, 4,000 we're seeing, and it's called a debasement trade with the US dollar on track for its worst yearly performance in 8 years. Down 9%. Gold is reasserting itself as the ultimate store of value. Right, so because it's gold, because the dollar's going down, gold is flying. Central banks, particularly the BRICS bloc, are diversifying away from the dollar at record speeds to hedge against fiscal deficits and sanctions risks. Silver is actually outperforming gold on a percentage basis this year. Why? Because it's a dual threat asset. It's benefiting from the safe haven rush and a massive industrial deficit between solar energy, EVs, and AI infrastructure. We're in the 5th consecutive year of a structural silver shortage. Is a crash coming? Likely not a crash, but a rebalance. Both metals are technically overbought. On the weekly time frame, expect a healthy pullback to the $4,100 mark. A level of 62 for silver. Crypto. Bank of Japan hiked rates to 0.75, a 30-year high. This has forced global investors to unwind their carry trades, essentially selling risky assets like Bitcoin to pay back yen-dominated debt. Liquidity and tax loss harvesting. December is notoriously thin for crypto liquidity. We've seen institutional ETF outflows over $3 billion in November and December as funds lock in yearly profits or sell losers to offset capital gains taxes. Minor capitulation. On-chain data shows the network hash rate dropped 4% recently. Miners are selling their reserves to stay afloat, creating a supply overhang that Bitcoin needs to chew through before we see 100k. S&P 500, the Nasdaq currently caught in a valuation wall. Rate cut speculation. The market is pricing in an 87% chance of a Fed rate cut this month. Well, usually good for stocks. The good news is bad news era has returned. Strong GDP growth is making the Fed hesitate, which is keeping indices range bound. The AI rotation, we're seeing a shift from growth to value. Investors are moving out of overextended AI tech stocks and into defensive sectors like healthcare and utilities. This is why the Nasdaq is showing more technical weakness. than the broader S&P 500. For the week ahead, eyes are on the dollar index. If the dollar continues to slide, the metals rally has more room to run. If we see a dead cat bounce in the dollar, expect a sharp correction in gold and silver. So yeah, nice. That's it. That's it for this week. We'll keep an eye on these trades, these kind of fake trades that I've done. And see how they go. I'm going to back test this strategy. Oh, look at that. It's almost done already. Gonna back test this new kind of idea I've had with the ICT stuff, smart money, and we'll go from there. Peace out.